Hey, hello everybody. How are y'all doing today? I hope everybody's having a great day. It's been a great week for us so far. Been very, very busy. We were up in Tehachapi, California yesterday, if you know where that is. Me and my little brother. Way, way, way far away from Orange County where I'm at in California, but a beautiful area. A lot of retirees up there. But today what I wanted to do is hop on and talk a little bit about a concern I keep seeing in the group here, which is how do you know if you can retire, or how do you know how much you need to retire if you still have a few years away, and when it comes to how much you need to save and everything like that. So what I want to do is just do a quick training for you just to get you started and thinking about this and give you 4 steps to help you determine how much you need so that you can retire, okay? So I put together this training for you. If you're watching this live, wonderful, feel free to ask questions. If you are not watching this live, go ahead and post your questions down in the comments after or during the training, and I'll do my best to answer those right after, okay? Or along this week. So let me pop this up real quick. Okay, so today we're going to talk about how to determine what you need saved for retirement in 4 steps, okay? So really, at the end of the day, it comes down to numbers, but what most people are doing wrong is that they're not estimating correctly, okay? And they are probably underestimating for the most part. There are some people that are over-savers, and they probably save more than they need, and they're going to spend less than they need and leave a big pile of money for their heirs, but most people are probably underestimating. Here's a couple quick facts for you. Let me go to this screen real quick. Shoot. Why doesn't it want to give me this screen here? Sorry about that. 1 second, guys. Okay, so let me go to these shocking facts here. This is going to be fun. This is not doing what I want it to do. Okay, sorry about that. So let me switch screens. Okay, so about 50% of workers believe they will need less than $500,000 to provide a comfortable retirement. I mean, that $500,000, it may seem like a lot of money to some people, and it is a lot of money, right, at the end of the day. But some people may have less than that. About 29% of these workers feel that they will need less than $250,000. So $250,000, again, that is a lot of money, but when it comes to, covering you for retirement and how long that will last, depending on how much income you have, it could really, it may or may not be enough, so it's really important that you get this number correct that I'm going to talk about next, okay? Let me switch back because this thing is not doing what I want it to do. And go here. Okay, so step 1, okay? Step 1 is to calculate your net annual retirement need, okay? So what does that mean? That means after any guaranteed income sources, essentially. So what are some guaranteed income sources? Maybe Social Security. Maybe it's a pension. Maybe you have some sort of military income or something that's going to last you for life, an income stream. Maybe you have an annuity that you've already that you're thinking about annuitizing. You need to figure out how much income you need net, okay, after all these sources. So let's say, for example, right now, currently, you are bringing in $100,000 of income. Say between you and your spouse, you have $100,000 in income coming in. And let's say since you're not going to pay Social Security tax anymore, you can take off 6.2% for that. And you're not going to pay Medicare tax anymore once you retire. So you can take off another 1.45, I believe, for that. And then you may not be saving technically anymore and putting money into your 401ks or IRAs. So you could take another, say, 10 or 12% off of that. Let's make it really easy. And let's say that you need 20% less money to live off of in retirement than you do now. Okay, so if you're making $100,000 and you needed 20% less, that means you would need to replace about $80,000 of income. Okay, so $80,000 of income, and that's in today's income. So if you're not retiring for 10 or 15 years, we need to adjust that. But let's say we need to replace $80,000 of income, okay? And let's say you have $3,000 a month or $36,000 that's planning to come from Social Security. So then you would take your $80,000 and you would subtract the $36,000 of Social Security that you're expecting, and that would leave you with $80,000 minus $36,000. Let's see what that would be. Just want to make sure I do it right. So that means you need to replace $44,000 with your investment sources, okay? So replacing $44,000, if you were to use the standard, I call it the back of the napkin rule, of a 4% withdrawal rate on your assets. Okay, so if you're going to take 4% of your assets each year, if you work the numbers out, that's going to pretty easily last you about 30 years. There are some questions about that, if that's still going to continue, because we've had some very, very good returns, and the market returns going forward aren't expected to be quite as good as they've been these last 15, 20 years. But let's just say you're going to use 4%. So that means you need about $1 million to safely replace that $44,000. Okay, so that's a lot of money. It's a lot of money for most people. You may or may not have $1 million. If you do, and this number works out for you, then great. Okay. But if you don't, then we have to start making other decisions here. So it gets a little bit tricky after that. But let me go to the next step here. So first of all, take your total income need, figure out what that number is, and then subtract your guaranteed income sources. Okay. All right. Now, step 2 is you need to adjust your income deficit for inflation over the pre-retirement period. Okay, so that's a lot of big fancy words. Okay, what does that mean? That means that if you have 10 years until retirement and you needed $80,000 today, then you're going to need, the equivalent of $80,000 in 10 years. And that's going to be more. So if you figure inflation is 3% a year, you're going to have to adjust that number up by 3%, maybe 4% over the next 10 years. So that's technically another 30% more money over 10 years if you use 3%. And so you're going to need closer to $100,000 replacement. But you want to look at today's numbers to start. Okay. So determine that income need in the first year of retirement. So whatever the first year of retirement is going to be and what age you're going to be, determine it for the first year. Okay. Then once you figure that out, then you're going to go to step 3 here. So step 3 is once you figure that out, then you can actually work backwards and determine what your total retirement fund needed will be. Okay. So once you figure out what that number is, maybe you only need $20,000 because maybe you have some good pensions. If you were to back out and figure out what you need to replace $20,000 at a 4% withdrawal rate, that's going to be about $500,000. You may be able to withdraw more, 5 or 6%. But once you get past 5%, it becomes very, very risky. You don't want to base your retirement assumptions on anything above 5%. And I honestly like to keep it around 3 or 3.5 because, again, interest rates for bonds are expected to go up, but for the stock market are not expected to be as high as they have been the next 15 to 20 years. Okay, and then once you get that, then what you need to do is figure out, okay, how much do you have now? What's your total savings now? Figure out what your timeline is, and then you need to break down how much you need to save between now and retirement, right? So, if you figure out that you're short by, say, $100,000, well, that means you need to save $10,000 a year over the next 10 years if you're going to retire in 10 years. Here's the tough reality, and we have to be really honest with ourselves. So many people want to just play the ostrich syndrome and put their head in the sand and just hope everything turns out okay. In all honesty, sometimes it does, sometimes it doesn't. I've seen a lot of people that get to their 80s and 90s and they can't work anymore, and then at that point they need to rely on relatives or they may be stuck having to sell their house. There's just a lot of other things that could come into play when you're going to run out of money. So you really need to know these numbers ahead of time, okay? So take the time, watch this, over a few times. If you need help, okay, if you need help with getting this correct and you want to know about your specific situation, because everybody's different, then go ahead and if you want to schedule an appointment with me, that's fine. We'll spend some time going over it. Just have your numbers ready. If you want to go to jasonjhamilton.com/hello. I guess I could type that up here. Let's see. Let me put a new one here for you. You can go to my website. Oh, shoot. We don't need that. Anyways, just go to jasonjhamilton.com/hello. I'll actually put that in the comments. If you need help with it, if you want to figure out what your calculation is, what it should be, you want to do this now. You don't want to wait until you're retired and then try to figure out if you have enough. That's like the worst thing that you can do, okay? We have to get the numbers. We have to be honest. We have to be deal with reality with these things. So again, I'm always here to help. I want to give you the best information I can in this group to help you succeed and be very successful in retirement. So we're going to start here. We're starting at the beginning to figure this out, and then we're going to continually add more things that you should be thinking about as you're going through, okay? Again, any questions, leave me a comment below. I'll be happy to answer them. I know a lot of you probably couldn't make the training right now. It wasn't announced, but I felt like hopping on and just sharing this with you. I'll leave the link for appointments, and if you need anything else, feel free to leave a question or comment in the group, and I'll be happy to respond to you, okay? You guys have a great day, and we'll talk soon.